Make your message clear with supporting material directly contributing to that message. Use appropriate transitions when moving from one idea to another. Create a strong opening and conclusion. Time allotted is 5 to 7 minutes. Mentor of Toastmaster Abdullah is Toastmaster Andy Rajan, and the title of his speech is
Fraudulent Investment Scheme. Fraudulent Investment Scheme.
Fraudulent Investment Scheme.
Thank you very much, Toastmaster Arika. Toastmaster Abdullah is another up-and-coming budding Toastmaster who joined recently, and he is again a friend of mine. In fact, he was my neighbor, and that's how we became friends. And it was around the time, let's say 5-6 years ago. And as soon as I met him, I knew he is a charismatic, charming fellow. And I would say that we had amazing time, because there were like a couple of friends during the summer in 5-6 years ago, and we used to go out, have barbecue, and that's how we enjoyed our time. And later on, I moved somewhere else, and he moved somewhere else, because we were pursuing our higher education. And later on, I just met him, and I asked him, so we have this, I met him suddenly out of nowhere, and he was here, and I asked him, do you want to come to Toastmasters? There's an area contest going to be there. And he asked, yeah, you have to pay just 25 reals. No. But I still convinced him, and I brought him to the area contest, and as soon as he came there, he was active. Because I was assigned operational duties, and he was helping me out, distribute flyers, place trophies here and there. And when he came to this club and started attending, and I was the sergeant now, so upon his dedication in the area contest, I asked him, while I was unpacking or packing the banner and putting up the scheme, Abdullah, can you please help me? Yeah, I'll come, just let me make tea. And straight away I realized that his humor was a little not straightforward, but later on, when he came back, he came up with 2 cups of tea. So this is the kind of person he is. I mean, from my point of view, he is, to others he might be more than my point of view, and I hope so. So please help me welcome our Toastmaster Abdullah with his speech.
Mr. Toastmaster of the Day, Mr. President, fellow Toastmasters and guests. Fraudulent Investment Scheme. If you recall 1987, right after the famous market crash in 1987, there was a very famous analyst working in the Security Exchange Commission at the time in the US, whose name was William Ray, submitted a very famous report that was titled The Causes and Effects of Economic Downturns. In one segment of his report, he discusses that after much of these economic downturns, a lot of economic downturns, right after those, a lot of fraudulent investment schemes get exposed and they unsurface. And according to him, as per his calculations, at least 10% of the entire economic activity, 10% of the entire economic value lost during the economic downturn is because of those fraudulent schemes. He goes on further to investigate the top 10 most deadliest schemes in investment fraud, and he discusses them by ranks. Some of the schemes included were the pyramid scheme, the pay-as-you-go-along scheme, and the famous Section 43 disguise scheme. But the one that took the top spot was the topic of a lot of media debate last year and the last year to that, and it's going to be the topic of my discussion this evening. It's called the Ponzi scheme. Pretty sure a lot of you may have heard that. I mean, if you watch BBC once a week, I'm pretty sure you know what I'm going to talk about. Ponzi scheme. What exactly is a Ponzi scheme? Now, before going any further to discuss what a Ponzi scheme is, I guess it's worth the note to take account of what a mutual fund is exactly. So in basic layman terms, all economic entities from an individual level to the corporate to the government level at some point in time have some sort of extra wealth. And they need to put that wealth into some economic use and enhance that wealth. So they invest this money into money and capital markets and shares, bonds, stocks, you name it. So, but most of us, being individuals, we don't have the required expertise, the resources, or the time to go and explore markets and know exactly how these markets function and what kind of investment, what form of investment suits us best for the level of risk we're willing to take and the kind of return we're expecting. So what we do is we go to these organizations called a mutual fund, we invest our money over there, they gather a pool of investments from various investors and invest the money on our behalf. And the returns that are generated, a fixed percentage comes to us every year as per the contract. Now here's what a Ponzi scheme is. Now observe the difference. Say for example, this is the mutual fund, this table, all right, and this is the pool of investors. Now Miss Sadia one morning come to Ava and deposit $100 as investment as a 20% return in 2 days, right? The next day Mr. Irfan comes and he gives another $100 to Ava for 20% return the day next to that. So basically the pool, the mutual funds pool is now $200, right? Now next morning she comes back, she asks for her principal and the return, which is now $120, simple math. And now what Ava would do, instead of investing this money and generating returns from money in capital markets, he would simply take out the $120 from this $200 and pay it to her. And before next morning, before he comes next morning, I would expect another investor to come by and deposit another $100 so he can pay off his debt. That is basically, in simple layman terms, what a Ponzi scheme is all about. So basically, the money is not put into some economic use. Instead, it simply changes hands. So there is no economic growth, right? There is simply a deception, very basic form of deception. Now, how do they generate funds? How does a Ponzi scheme operator attract investors? Basically, there are two ways. One is a greed-based strategy, and the other one is a trust-based strategy. In a greed-based strategy, basically, the fund offers more than abnormal returns to the investor. For example, the market is offering 10%, the fund would be offering 20%. Under a trust-based strategy, the firm probably has a very good reputation in the past, and investors have quite a confidence in the firm, so they would put their money over there having that confidence and faith in the firm. Most commonly, however, it's a combination of two, both trust as well as greed. Now, how long can they last, a Ponzi scheme? Well, virtually forever, unless, and that's a big unless there's some sort of an economic hurdle or some sort of an economic downturn. Because what happens is, in times of economic downturn, everyone looks forward to withdrawing their investments because they're insecure, the risk is high. And so what happens is that they go back to this fund as a group, and the firm does not have enough liquidity or the cash to pay the money back. So basically, they cannot pay off the money, and they are left exposed to the government that okay, they were operating a Ponzi scheme. Very famous example of a well-run Ponzi scheme was last year, Bernie Madoff, the Bernie Madoff issue. He started his mutual fund in 1960 and has been running a Ponzi scheme since 1980. And according to economic analysts, through his Ponzi scheme at least, there has been a loss of $80 billion worth of investors' money in the economy. So this, now this money leaves no trace basically, because all this money is channelized to various sources, so that there is no way that government bodies could detect where this money flows to. So basically, the money disappears in thin air without any trace. Now, as a conclusion, my recommendation is to two set of bodies. One is the SEC, Security Exchange Commission, and the other one are investors. For the Security Exchange Commission, I would suggest that they should have watchdogs who should be in place just to observe how the money flows in the economy and whether or not returns are realized. And for individuals, I would suggest awareness. I mean, they should be aware where the money goes to. If a deal is too good to be true, it's probably not true. So, I mean, but these things don't really work in practice. I mean, as Tony Blair said, that a bubble looks really good as long as it's floating. It's only when it bursts that you think to yourself, oh God, I didn't know it was hollow from the inside. And that's the time of self-reflection. Over to you, Mr.